Hi, Kerry here from My Quick Bookkeeping. Today I'm going to show you how currency variations are calculated in QuickBooks Online and how you can assign different currencies to transactions at the time you record them. If you're not familiar with QuickBooks Online, you might be tempted to just enter everything with a one-for-one exchange rate thinking that your accountant can clear it up at year-end, or if you're an accountant that you'll clear it up at year-end. There's no need to do this. Multi-currency in QuickBooks Online works seamlessly if you just know how to use it. So I'm going to follow through so you can see how those transactions work. I'm going to enter a bill from a US dollar supplier on June 30th. I can either use the exchange rate provided by QuickBooks or adjust it. For this exercise, I'm going to choose a nice round 1.3, so it will be easier to track the movement later. Note that there's a warning. I'm using this rate for this transaction only. The supplies purchase, $10,000, is now calculated as 13,000 Canadian. Note that this is the amount that will appear in all of our reports. All reports are displayed in the home currency. So let's have a look. So let's have a look in the profit and loss. We now have an expense for supplies of $13,000. Let's have a look in the balance sheet also. Scroll down here, we have accounts payable. It says USD for $13,000. It can be a little bit confusing because of the notation of the account, but the amount is displayed in Canadian dollars. The accounts payable accounts are separated by currency. This is automatically set up by QuickBooks. Now let's pay the supplier many months later. Not necessarily a good practice, but we want to see how the rate change impacts our reporting. Under Pay Bills, we must select the currency of the bills we're paying. In this case, US dollars. Our US dollar supplier is right here. Now we're going to pay them on November 30th, and the exchange rate has changed. I'm going to use my Canadian dollar account to pay them. And I know that the rate the bank is going to give me is not the same as the rate quoted by QuickBooks. So here's a reason why we'd make a change. I'm going to use a nice round 1.25. Oops. So we can easily see the exchange difference in our reports. We're paying from a Canadian dollar account, and here we can see the amount of the payment is $12,500. The USD amount is $10,000, which is what's being calculated at that rate of 1.25 that we specified. Now let's look at our income statement. The exchange gain or loss is being calculated automatically as $500. This is the difference between the 1.3 when we purchased the supplies and the 1.25 when we paid for them. If this video was useful, click like below, subscribe to my channel. If there's anything else that you'd like to know about, please make a note. My next video could be for you. Cheers!